The rain hammered against the floor-to-ceiling windows of the 42nd floor as Sarah Mitchell stared at the foreclosure notice in her trembling hands. 3 months. That's all Marcus Hartwell had given her family's bakery before the bank would seize everything her grandmother had built over 60 years. The same Marcus Hartwell who had once told her that women didn't have the analytical mind for high finance. The same man whose signature now appeared at the bottom of every rejection letter, every denied loan application, every crushing blow to her family's legacy. I'd love to know which corner of the globe you're watching from. And if this story speaks to you, make sure to subscribe. Tomorrow's video is one you absolutely can't miss. But Marcus had made one critical mistake. He had underestimated the quiet girl from Brooklyn, who used to calculate compound interest in her head while other kids played with dolls. The girl who had graduated summa cum laude from Wharton, who had memorized every financial regulation before her 22nd birthday, who had been dismissed from 3 different firms for being too aggressive and not a cultural fit. Today, 10 years later, Sarah Mitchell was about to make a phone call that would change everything. Her finger hovered over the contact marked Marcus Hartwell, personal. She had news that would make his blood run cold. News about his own mortgage, his own financial security, his own future. Because sometimes, the best revenge is simply letting someone destroy themselves while you hold all the cards. Sarah Mitchell's alarm clock screamed at 4:47 a.m., just like it had every morning for the past 3 years. She rolled out of her cramped studio apartment in Queens, the same apartment she'd been living in since graduating from business school, with a mountain of debt and dreams bigger than the Manhattan skyline. The coffee maker gurgled to life as she pulled on her best interview suit, a navy blue ensemble from Target that she'd worn to 17 different job interviews in the past 6 months. 17 interviews. 17 rejections. The subway ride to Lower Manhattan gave her exactly 43 minutes to review her presentation one more time. Premier Financial Group was her 18th chance, and according to her rapidly dwindling savings account, possibly her last. She'd been surviving on ramen noodles and determination for weeks, but today felt different. Today felt like the day her luck would finally turn. The Premier Financial Building rose like a glass monument to capitalism, its steel and chrome facade reflecting the morning sun in sharp, aggressive angles. Sarah straightened her shoulders and walked through the revolving doors, her heels clicking against the marble floor with more confidence than she actually felt. "Miss Mitchell, is it?" The receptionist's smile was practiced and hollow. "Mr. Hartwell will see you in conference room B, elevator to the 38th floor." Marcus Hartwell was exactly what Sarah had expected from their brief phone conversation. Mid-40s, perfectly styled silver hair, a suit that probably cost more than her monthly rent, and the kind of smile that never quite reached his eyes. He sat at the head of a mahogany conference table that could have seated 20 people, flanked by 2 other men in identical expensive suits. "Sarah, welcome to Premier Financial." Marcus gestured to a chair at the opposite end of the table. "I'm Marcus Hartwell, Senior Vice President of Commercial Lending. This is James Morrison, our Head of Risk Assessment, and David Chen, Director of Client Relations." Sarah settled into her chair and opened her portfolio with practiced precision. "Thank you for this opportunity, Mr. Hartwell. I've prepared a comprehensive analysis of your current commercial lending portfolio, along with several strategic recommendations for expansion." For the next 30 minutes, Sarah delivered the presentation of her life. She had spent weeks researching Premier Financial's operations, identifying gaps in their market coverage, and developing innovative solutions for client acquisition. Her voice remained steady as she walked through complex financial models, market projections, and risk assessment frameworks that she had created from scratch. Marcus and his colleagues listened in silence, occasionally exchanging glances that Sarah couldn't quite read. When she finished, the room fell quiet except for the distant hum of air conditioning. "Well," Marcus finally said, leaning back in his chair, "that was certainly thorough." Sarah felt a flutter of hope. "I believe Premier Financial has tremendous potential for growth in the small business lending sector. My analysis shows that with the right strategy." "Miss Mitchell," Marcus interrupted, his tone shifting from polite interest to something cooler. "I have to ask, where did you get your MBA?" "Wharton," Sarah replied, confused by the question. "I graduated summa cum laude with a concentration in corporate finance and..." And yet here you are, unemployed for, Marcus glanced at her resume, 6 months now? The room temperature seemed to drop 10 degrees. Sarah kept her expression neutral, though her heart rate accelerated. The job market has been challenging, but I'm confident that my skills and experience. Experience? David Chen interjected with a slight chuckle. You mean your 2 years as a junior analyst at a boutique firm that went under? Meridian Capital's closure was due to the founding partner's personal legal issues, not operational failures, Sarah said evenly. During my time there, I increased client portfolio returns by an average of 18% and… Look, Sarah, Marcus said, his voice taking on a patronizing tone that made her skin crawl. I'm going to be straight with you. This is a tough business. Commercial lending isn't about theories and presentations. It's about relationships, trust, and frankly, a certain level of gravitas that clients expect. Sarah's hands clenched slightly in her lap. I understand the importance of client relationships, Mr. Hartwell. In fact, my client retention rate at Meridian was… Here's the thing, Marcus continued, completely ignoring her response. Our clients are primarily construction companies, manufacturing businesses, and real estate developers. These are old-school industries run by old-school men. They're not going to take a young woman seriously when she's trying to advise them on million-dollar loans. The words hit Sarah like a physical blow, but she maintained her composure. With respect, Mr. Hartwell, I believe results speak louder than demographics. If you look at my track record… Your track record is 2 years at a failed firm and 6 months of unemployment, James Morrison said bluntly. That's not exactly confidence-inspiring. Sarah felt her cheeks burn, but she pressed on. I've also managed my own investment portfolio, which has outperformed the S&P 500 by 12% over the past 3 years. I've consulted for several small businesses in my neighborhood, helping them restructure their debt and improve their cash flow. And I've been volunteering with the Brooklyn Small Business Development Center, where I've helped over 30 entrepreneurs secure funding for their ventures. Marcus waved his hand dismissively. Volunteer work and personal investments are hobbies, not professional experience. This is about managing tens of millions of dollars in institutional capital. Then give me the chance to prove myself, Sarah said, leaning forward. A probationary period, a smaller portfolio to start with, whatever it takes. I know I can deliver results. The 3 men exchanged another look, and Marcus's expression softened slightly. Not with sympathy, but with the kind of condescending patience one might show to a child who didn't understand why they couldn't have ice cream for breakfast. Sarah, I'm going to give you some free advice, Marcus said, his tone almost fatherly. Finance isn't really suited for people like you. It's not personal, it's just biological. Women tend to be more emotional, more risk-averse. They don't have the killer instinct that this business requires. You're clearly intelligent, but maybe you'd be better suited for something in marketing or human resources. Something that plays to your natural strengths. The words hung in the air like toxic smoke. Sarah felt something break inside her chest. Not her spirit, but her last illusion that merit and hard work would be enough in this world. My natural strengths, she repeated quietly. Exactly, Marcus said, apparently oblivious to the dangerous edge in her voice. Women are great at supporting roles, at helping others succeed. But leadership and finance? Making the hard decisions that affect people's livelihoods? That requires a certain level of masculine energy. Sarah stood up slowly, gathering her materials with deliberate precision. Thank you for your time, Mr. Hartwell. Now, don't take this the wrong way, Marcus continued, also standing. I'm not trying to be discouraging. I'm just being realistic. Maybe consider graduate school for education or social work. There are lots of fields where women really excel. Sarah paused at the door, her hand on the handle. Mr. Hartwell, can I ask you something? Of course. What's your current mortgage interest rate? Marcus looked puzzled. I'm sorry? Your mortgage. What are you paying? 4%? 5%? I don't see how that's relevant. Just curious about your financial acumen, Sarah said with a smile that didn't reach her eyes. Since you're so confident in your ability to assess risk and market conditions, Marcus's expression darkened. Miss Mitchell, I think this interview is over. I think you're right, Sarah said, opening the door. Thank you again for your time. And your advice. The subway ride back to Queens passed in a blur of rage and humiliation. Sarah stared at her reflection in the train window, seeing not the summa cum laude graduate or the financial analyst who had never made a bad call, but the woman who had just been told that her gender made her fundamentally unsuited for the career she'd dreamed of since childhood. By the time she reached her apartment, the anger had crystallized into something harder and more focused. She sat at her tiny kitchen table, opened her laptop, and began typing. Not a job application this time, but a business plan. A lot of love and effort went into bringing this story to life. If you're enjoying it, we'd be so grateful if you'd subscribe to our channel. Now, back to where we left off. If Marcus Hartwell and his ilk wanted to keep her out of their boys' club, she would build her own. If they thought women couldn't handle high finance, she would prove them wrong in the most spectacular way possible. Sarah had always been good with numbers, but she had never been good at giving up. And Marcus Hartwell had just made the biggest mistake of his professional life. Over the next 72 hours, Sarah Mitchell disappeared into the depths of the internet. She mapped out Premier Financial's complete corporate structure, identified their key clients, analyzed their loan portfolio, and studied their competitive positioning in the market. She researched Marcus Hartwell's background, his career trajectory, his professional connections, and his personal financial history. What she found was illuminating. Premier Financial was a regional player trying to expand into national markets, but they were hemorrhaging market share to more agile competitors. Their loan default rates were above industry average, their client satisfaction scores were declining, and their stock price had been stagnant for 18 months. Marcus Hartwell, for all his bluster about masculine energy and killer instincts, was presiding over a slow-motion corporate decline. But more interesting than Premier's weaknesses were the opportunities Sarah identified. Small business lending was exploding as traditional banks pulled back from the market. Fintech companies were disrupting the industry with faster approvals and better customer service. And there was a massive underserved market of women and minority entrepreneurs who were being systematically excluded from traditional funding sources. Sarah had found her angle. She also found something else during her research, something that made her smile for the first time in days. Marcus Hartwell's personal financial information, gleaned from public records and social media posts, painted a picture of a man living well beyond his means. The house in Westchester, the vacation home in the Hamptons, the private school tuition for his kids, all of it leveraged to the hilt. Sarah made a note of his mortgage lender and moved on to the next phase of her plan. Sarah had always been a connector, someone who remembered names and faces and made introductions that benefited everyone involved. Now she reached out to every contact in her professional network, every classmate from Wharton, every former colleague from Meridian Capital. Her first call was to Elena Rodriguez, a brilliant risk analyst who had been laid off from Deutsche Bank 3 months earlier. Elena was frustrated, underemployed, and ready for a change. "Sarah, what are you thinking?" Elena asked after hearing the pitch. "Starting a lending company from scratch? Do you have any idea how much capital that requires?" "I have some ideas about that," Sarah said cryptically. "But first, I need to know if you're interested in being my co-founder and head of risk assessment." Elena was quiet for a long moment. "What's the catch?" "No catch. Just a chance to prove that we can do this better than the Marcus Hartwells of the world." "When do we start?" Sarah's second call was to Jennifer Park, a marketing genius who had been passed over for promotion at Goldman Sachs despite generating more client leads than anyone else in her division. Jennifer was tired of being invisible and hungry for recognition. "Lead, Seer. You want to compete with the big banks?" Jennifer asked. "Sarah, that's not David versus Goliath. That's more like an ant versus a boot." "Sometimes the ant finds the right pressure point," Sarah replied. "Are you in?" Jennifer laughed. "Hell yes, I'm in." The third call was to Amanda Foster, a technology specialist who had been building fintech solutions for other people's companies while watching men take credit for her innovations. Amanda was ready to build something for herself. "What kind of timeline are we talking about?" Amanda asked. "Aggressive," Sarah admitted. "I want to be operational within 6 months." "Impossible." "Is it?" Amanda was quiet for a moment. "Let me think about it." "Actually, No, I don't need to think about it. I've been designing a lending platform in my spare time. It would need some modifications, but the core architecture is already there. Amanda, you're a genius. I know. When do we start? By the end of the week, Sarah had assembled a team of 6 highly qualified, chronically undervalued women who were ready to revolutionize the lending industry. They were smart, they were hungry, and they were tired of being told they weren't good enough. Lexus. More importantly, they were about to prove Marcus Hartwell very, very wrong. Sarah's apartment had been transformed into a war room. Whiteboards covered every wall, filled with market analysis, competitive intelligence, and strategic timelines. Her kitchen table groaned under the weight of laptops, financial reports, and legal documents. Elena had moved her computer setup into the living room. Jennifer had claimed the bedroom as her marketing command center, and Amanda had turned the bathroom into her debugging sanctuary. Okay, Sarah said, standing in front of the main whiteboard. Let's talk about our competitive advantage. We're smaller, faster, and more flexible than the big banks, Elena offered. We understand underserved markets better than our competitors, Jennifer added. Our technology will be more user-friendly and efficient, Amanda chimed in. All true, Sarah agreed, but those are tactical advantages. What's our strategic advantage? The room fell silent as the women considered the question. We're angry, Elena said finally. Sarah smiled. Exactly. We're angry, and we're channeling that anger into something productive. We're not just building a business, we're building a movement. Over the next several hours, they outlined their strategy. They would launch with a focus on small business lending, specifically targeting women and minority entrepreneurs who were being underserved by traditional banks. They would use technology to streamline the application process, reduce overhead costs, and provide faster approvals. They would build relationships with community organizations, business development centers, and entrepreneur networks. Most importantly, they would prove that good business was good business, regardless of who was making the decisions. What about funding? Amanda asked. We're going to need serious capital to compete. Sarah's smile widened. I've been thinking about that. What if I told you I had a way to get our first major investor to come to us? I'd say you're either brilliant or delusional, Elena replied. Maybe both, Sarah admitted. But I have a plan. 2 weeks later, Sarah Mitchell walked into the offices of Metropolitan Community Bank, a mid-sized regional lender that had been struggling to compete with larger institutions. She was dressed in her best suit again, but this time she carried herself differently. This time, she wasn't asking for a job. She was proposing a partnership. Ms. Mitchell, said Robert Chen, the bank's CEO, as he welcomed her into his office. I have to admit, your proposal intrigued me. You want to launch a subsidiary focused on small business lending? Not exactly, Sarah corrected. I want to create a joint venture. Metropolitan would provide the initial capital and regulatory framework, while my team would handle operations, technology, and client acquisition. Robert leaned back in his chair. And what makes you think you can succeed where others have failed? Because we understand the market better than anyone else, Sarah replied. We've been locked out of it. For the next hour, Sarah presented her business plan with the same precision and passion she had shown at Premier Financial. But this time, she was speaking to someone who was actually listening. Your projections are aggressive, Robert said when she finished. Our market research is solid, Sarah replied. There's a massive opportunity here, and we're uniquely positioned to capture it. What about your team's experience? Combined, we have over 20 years of experience at major financial institutions. We've seen what works and what doesn't. We know where the industry is headed. Robert was quiet for a long moment, studying the financial models Sarah had presented. You're asking for a lot of autonomy. I'm asking for the freedom to prove we can deliver results, Sarah said. If we don't hit our targets, you can shut us down. If we do, Metropolitan benefits from a successful subsidiary and a competitive advantage in an underserved market. And if you succeed beyond your projections? Sarah smiled. Then we'll have proven that the future of banking isn't about who makes the decisions. It's about how good those decisions are. Robert Chen extended his hand. Ms. Mitchell, I think we have a deal. As Sarah shook his hand, She thought about Marcus Hartwell and his lecture about masculine energy and killer instincts. She wondered what he would think when he found out about her new venture. She would find out soon enough, because the next phase of her plan was about to begin, and Marcus Hartwell was about to discover that underestimating Sarah Mitchell was the most expensive mistake he would ever make. 6 months after that humiliating interview at Premier Financial, Sarah Mitchell stood in the lobby of a sleek office space in downtown Brooklyn, watching as movers carried in desks, computers, and the custom-built servers that would power her new venture. The sign on the glass door read, "Brooklyn Capital Solutions," in bold, modern lettering that seemed to catch the morning light and throw it back with interest. "It's really happening," Elena said, appearing at Sarah's shoulder with 2 cups of coffee and a grin that could have powered half the building. "It's really happening," Sarah agreed, accepting the coffee gratefully. The past 6 months had been a whirlwind of regulatory filings, technology development, and late nights that blended into early mornings. But now, finally, they were ready to open their doors. The office space was perfect, large enough to accommodate their growing team, modern enough to impress clients, and affordable enough to fit their startup budget. More importantly, it was in Brooklyn, in the heart of the community they planned to serve. No marble lobbies or intimidating corporate towers. Just clean lines, natural light, and the kind of welcoming atmosphere that made people feel comfortable discussing their financial dreams. "The regulatory approval came through this morning," Jennifer announced, bursting through the front door with a stack of official documents. "We are officially licensed to lend money in New York State." Amanda looked up from her laptop, where she was running final tests on their lending platform. "And our technology stack is ready to go live. We can process applications in real time, conduct risk assessments in minutes instead of weeks, and provide approval decisions within 24 hours. Sarah surveyed her team. These brilliant women who had bet their careers on a startup led by someone who had been rejected by every major bank in the city. Elena was adjusting the settings on their risk management software, her fingers flying across the keyboard as she fine-tuned algorithms that could spot potential problems before they became actual losses. Jennifer was setting up their marketing materials, creating campaigns that would speak directly to the entrepreneurs who had been ignored by traditional lenders. Amanda was coordinating with their partner bank, ensuring that every technical integration was seamless and secure. "Ladies," Sarah said, raising her coffee cup in a mock toast, "we're about to change the game." Their first client walked through the door at 9:47 a.m. on their second day of operations. Maria Santos was a 43-year-old single mother who had been running a small catering business out of her home for the past 3 years. She needed a loan to expand into a proper commercial kitchen, but every bank she had approached had turned her down. "They keep asking for collateral I don't have," Maria explained, sitting across from Sarah in the small conference room they had designated for client meetings. "My business is profitable, my customers are happy, and I have contracts lined up for the next 6 months. But apparently that's not enough." Sarah reviewed Maria's financial statements, tax returns, and business plan. The numbers told a clear story. This was a profitable business with steady growth and a dedicated customer base. The traditional banks had rejected her because she didn't fit their rigid criteria, not because she was a bad investment. "Maria, I'm going to ask you some questions that might seem unusual," Sarah said. "Tell me about your customers. Who are they, and why do they choose your catering over your competitors?" For the next 20 minutes, Maria described her business with passion and precision. She knew her profit margins down to the penny, understood her market better than any consultant, and had a clear vision for growth that was both ambitious and realistic. She wasn't just asking for money, she was presenting an opportunity. "I can offer you a loan at 6.5% interest with a 5-year repayment schedule," Sarah said finally. "No collateral required, but I will need a personal guarantee and quarterly financial reporting." Maria's eyes widened. 6.5%? The banks that even considered my application were talking about 12 or 13%. "Our business model is different," Sarah explained. "We're not just lending money, we're investing in your success. When you succeed, we succeed. When you grow, we grow." Maria signed the loan documents that afternoon, becoming Brooklyn Capital Solutions' first official client. As she left the office, she turned back to Sarah with tears in her eyes. "Thank you for believing in me," she said. "No one else would." "Thank you for giving us the chance to prove ourselves," Sarah replied. "I have a feeling you're going to be very successful." Word spread quickly through Brooklyn's small business community. Brooklyn Capital Solutions was approving loans that traditional banks wouldn't touch, offering competitive rates, and treating entrepreneurs like partners rather than supplicants. Within 30 days, they had processed over 200 applications and approved 63 loans totaling $4.2 million. The borrowers were diverse: a young tech entrepreneur developing a food delivery app, a retired teacher starting a tutoring service, a group of recent immigrants opening a specialty grocery store, a veteran launching a home security business. Each had been rejected by at least one traditional lender, and each brought unique challenges that required creative solutions. Sarah found herself working 18-hour days, but she had never been happier. This was the kind of work she had always dreamed of, using financial expertise to help people achieve their goals rather than simply maximizing profits for shareholders. "We're ahead of our projections," Elena reported during their weekly team meeting. "Default rates are below industry average, customer satisfaction is through the roof, and we're generating positive cash flow. The marketing is working too," Jennifer added. "We're getting referrals from existing clients, and our online presence is growing organically. The Brooklyn Business Journal wants to do a feature story on us. And our technology is performing flawlessly," Amanda concluded. "Zero downtime, fast processing, and the user interface is getting rave reviews from applicants." Sarah smiled, but she couldn't shake the feeling that they were still missing something. They were successful, but they weren't making the kind of impact she had envisioned. They were helping individual entrepreneurs, but they weren't changing the industry. That was when she got the call that would change everything. "Sarah, you need to see this," Elena said, rushing into the conference room where Sarah was reviewing loan applications. "Check the financial news." Sarah opened her laptop and navigated to the Wall Street Journal's website. The headline made her heart skip a beat. "Premier Financial Group facing regulatory investigation over discriminatory lending practices." The article detailed allegations that Premier Financial had systematically denied loans to women and minority-owned businesses, despite many of those businesses having stronger financial profiles than approved applicants. The Consumer Financial Protection Bureau had launched a formal investigation, and several civil rights organizations were preparing class action lawsuits. "This is huge," Sarah said, scanning the article. "If these allegations are proven, Premier could face massive fines and regulatory sanctions." "It gets better," Elena replied, pulling up another article. "Look at their stock price." Premier Financial's stock had dropped 15% in the past week, wiping out hundreds of millions in market value. Investors were fleeing, and analysts were downgrading their recommendations. "They're vulnerable," Sarah realized. "This is exactly the kind of opportunity we've been waiting for." She spent the rest of the day researching Premier Financial's situation, analyzing their client base, and identifying their weaknesses. What she discovered was a company in crisis, facing regulatory scrutiny, losing market share, and hemorrhaging talent as key employees jumped ship to competitors. But more importantly, she discovered something else. Premier Financial's commercial real estate portfolio included several properties in Brooklyn, including the building that housed 3 of Brooklyn Capital Solutions' most successful clients. If Premier decided to call in those loans or refuse to renew them, it could devastate the local business community. Sarah picked up her phone and dialed a number she had memorized but never called. "Marcus Hartwell's office," a crisp voice answered. "This is Sarah Mitchell from Brooklyn Capital Solutions," Sarah said. "I'd like to schedule a meeting with Mr. Hartwell to discuss a potential business opportunity." The meeting was scheduled for the following Wednesday at Premier Financial's headquarters. Sarah arrived 15 minutes early, dressed in her best suit and carrying a leather portfolio that contained the most important presentation of her career. Marcus Hartwell looked older than she remembered, and there were stress lines around his eyes that hadn't been there 6 months ago. The regulatory investigation was clearly taking its toll. "Miss Mitchell," he said, gesturing to the same chair she had occupied during her job interview. "I have to admit, I was surprised to hear from you." "I'm sure you were," Sarah replied, settling into the chair with the confidence of someone who held all the cards. "I wanted to discuss a potential partnership opportunity." Marcus raised an eyebrow. "Partnership?" "I've been following Premier's situation in the news," Sarah said. The regulatory investigation, the stock price decline, the client defections. It's a challenging time for your organization. We're confident that the investigation will vindicate our lending practices, Marcus said stiffly. I'm sure you are, Sarah replied. But even if it does, the damage to your reputation in the small business lending market may be irreversible. Your clients are losing confidence, your competitors are gaining market share, and your stock price reflects the market's skepticism about your future prospects. Marcus's expression darkened. Miss Mitchell, if you came here to gloat, I came here to offer you a solution, Sarah interrupted. Brooklyn Capital Solutions has processed over $15 million in loans in our first 6 months of operation. Our default rates are below industry average, our client satisfaction scores are exceptional, and we're growing at a rate that exceeds our most optimistic projections. And I'm proposing that Premier Financial acquire Brooklyn Capital Solutions, Sarah said. You get immediate access to our client base, our technology platform, and our expertise in underserved markets. You also get a team of experienced professionals who can help you rebuild your reputation and restore investor confidence. Marcus leaned back in his chair, studying Sarah with new interest. What would you want in return? Full operational autonomy for Brooklyn Capital Solutions as a premier subsidiary, Sarah replied. I would serve as president of the small business division, reporting directly to the CEO. My team would retain their current roles and responsibilities, and we would maintain our current lending practices and client relationships. And compensation? Equity participation in the acquisition, plus performance bonuses tied to the subsidiary's profitability, Sarah said. I'm not interested in just a salary. I want to be a partner in Premier's success. Marcus was quiet for a long moment, considering the proposal. Sarah could see the wheels turning in his head. The potential benefits, the risks, the political implications of bringing in the woman he had once dismissed as unsuitable for finance. This is a significant decision, he said finally. I'll need to discuss it with our board of directors. Of course, Sarah agreed. But I should mention that I've had preliminary discussions with 2 other regional banks about similar arrangements. Brooklyn Capital Solutions is an attractive acquisition target, and I want to make sure we partner with the right organization. It was a calculated bluff, but Marcus didn't need to know that. He straightened slightly, his competitive instincts kicking in. How much time do I have to consider this? He asked. 2 weeks, Sarah replied. I'll need an answer by the end of the month. As Sarah left the Premier Financial building, she felt a mixture of excitement and apprehension. The proposal was ambitious, possibly even audacious, but it was also exactly the kind of bold move that could transform Brooklyn Capital Solutions from a successful startup into a major player in the industry. More importantly, it would put her in a position to implement the changes she had always envisioned, not just for her own company, but for the entire financial services industry. The next 2 weeks were torture. Sarah tried to focus on her regular responsibilities, but she found herself constantly checking her phone and email for news from Premier Financial. Elena, Jennifer, and Amanda were all aware of the proposal, and the entire office was buzzing with nervous energy. What if they say no? Amanda asked during one of their late-night strategy sessions. Then we continue building Brooklyn Capital Solutions until we're big enough to compete with them directly, Sarah replied. But I don't think they'll say no. They need us more than we need them. What if they say yes but try to change the terms? Jennifer asked. Then we walk away, Sarah said firmly. We're not going to compromise our values or our mission just to get acquired. On the 13th day, Sarah's phone rang. The caller ID showed Premier Financial's main number. Sarah Mitchell, she answered, trying to keep her voice steady. Miss Mitchell, this is Marcus Hartwell. Could you come in this afternoon? I'd like to discuss your proposal. Sarah's heart raced. Of course. What time works for you? 3 o'clock. And Sarah? You might want to bring your team. I think we have a deal. Sarah hung up the phone and turned to face her colleagues, who were watching her with barely contained excitement. Ladies, she said, I think we just got acquired. The Premier Financial boardroom was packed with executives, lawyers, and advisors. Sarah sat at one end of the massive conference table, flanked by Elena, Jennifer, and Amanda. At the other end sat Marcus Hartwell, looking simultaneously relieved and apprehensive. After careful consideration, Marcus began, The board has voted to approve the acquisition of Brooklyn Capital Solutions. The terms are essentially as you proposed: full operational autonomy, equity participation, and performance-based compensation. Sarah maintained her poker face, but inside she was celebrating. This was bigger than she had dared to hope. "There is one additional condition," Marcus continued. "Given the current regulatory environment, we want to expand Brooklyn Capital Solutions operations beyond New York. We're proposing to launch similar subsidiaries in New Jersey, Connecticut, and Pennsylvania, with you overseeing the entire regional operation." Sarah blinked. This wasn't just an acquisition. It was a complete transformation of her business model. "That's ambitious," she said carefully. "We believe that Brooklyn Capital Solutions represents the future of small business lending," Marcus replied. "And we want to be leaders in that future, not followers." The lawyers spent the next 3 hours working through the details: corporate structure, reporting relationships, financial metrics, and performance targets. Sarah found herself negotiating not just for her own company, but for an entire vision of what banking could become. When the contracts were finally signed, Marcus stood and extended his hand to Sarah. "Congratulations, Miss Mitchell," he said. "You're now the youngest division president in Premier Financial's history." Sarah shook his hand, remembering the last time they had been in this position. 6 months ago, he had told her that women weren't suited for finance. Now he was making her one of the most powerful people in his organization. "Thank you, Mr. Hartwell," she said. "I look forward to working together." As she left the building that evening, Sarah realized that this was just the beginning. She had proven that she could build a successful business, but now she had to prove that she could transform an entire industry. The real work was just getting started. 3 months after the acquisition, Sarah Mitchell stood in the executive conference room on the 42nd floor of Premier Financial's headquarters, looking out at the Manhattan skyline she had once dreamed of conquering. The irony wasn't lost on her. She was now occupying an office 3 floors above the room where Marcus Hartwell had once told her she wasn't suited for finance. "The Q3 numbers are in," Elena announced, entering the room with a tablet full of performance metrics. Brooklyn Capital Solutions has originated $127 million in loans across 4 states, with a default rate of 1.2%, nearly 3 percentage points below industry average. Sarah turned from the window, her mind already processing the implications. "What's our market penetration looking like?" "Phenomenal," Jennifer replied, joining them with her own set of reports. "We're capturing 23% of the small business lending market in our target demographics. Our customer acquisition costs are down 31% from last quarter, and our net promoter score is 87, higher than any major bank in the region." Amanda looked up from her laptop, where she was monitoring real-time system performance. "And our technology infrastructure is handling the volume beautifully. We're processing applications 73% faster than Premier's legacy systems, and our mobile platform has a 96% user satisfaction rating." Sarah smiled, but her expression remained focused. Success was gratifying, but it was just the foundation for what came next. "What about the compliance audit?" "Clean as a whistle," Elena confirmed. "The regulators found 0 evidence of discriminatory lending practices in our portfolio. In fact, they specifically commended our approach to underserved market development." The contrast with Premier Financial's ongoing regulatory troubles was stark. While Sarah's division was being praised for its inclusive practices, the parent company was still fighting allegations of systematic discrimination. The Consumer Financial Protection Bureau had expanded their investigation, and several high-profile discrimination lawsuits were working their way through the courts. "Speaking of which," Jennifer said, "Marcus wants to see you in his office at 4 o'clock. Something about a strategic planning session." Sarah glanced at her watch. That gave her 2 hours to prepare for whatever Marcus had in mind. Given the current regulatory climate, she suspected he was going to ask her to help clean up the mess he had created. Marcus Hartwell's corner office was a monument to corporate excess: leather furniture, original artwork, and a view of Central Park that probably cost more in annual rent than most people made in a lifetime. But when Sarah entered, she noticed something different about Marcus himself. The confident swagger that had once defined his presence was gone, replaced by the slightly desperate energy of a man who knew his career was hanging by a thread. "Sarah, thank you for coming." Marcus said, gesturing to a chair across from his desk. "I wanted to discuss some strategic initiatives for the coming quarter." "Of course," Sarah replied, settling into the chair and opening her portfolio. "What did you have in mind?" Marcus leaned forward, his expression serious. "As you know, Premier Financial is facing some challenges with regulatory compliance. The board has asked me to explore ways to demonstrate our commitment to fair lending practices across all our divisions." Sarah nodded, keeping her expression neutral. She had been expecting this conversation for weeks. "I'd like to propose that we expand your Brooklyn Capital Solutions model to our entire commercial lending operation," Marcus continued. "Same underwriting standards, same technology platform, same client service approach. Essentially, we'd be rolling out your methodology company-wide." It was a bigger proposal than Sarah had anticipated. Marcus wasn't just asking her to help with compliance. He was asking her to restructure Premier Financial's entire business model. "That's a significant undertaking," Sarah said carefully. "Our approach requires different training, different systems, and a fundamentally different philosophy about risk assessment. It's not something that can be implemented overnight." "I understand," Marcus replied, "but I believe it's necessary. Your division is the only part of Premier Financial that's growing right now. While our traditional lending business is stagnating, you're capturing market share and generating positive regulatory attention." Sarah studied his face, looking for signs of insincerity or manipulation. But what she saw was genuine concern and genuine respect for what she had accomplished. "What kind of timeline are we talking about?" she asked. "Aggressive," Marcus admitted. "The board wants to see measurable progress within 6 months. They're concerned that if we don't demonstrate significant changes soon, we could face regulatory sanctions that would severely impact our operations." Sarah was quiet for a moment, considering the implications. This was an opportunity to implement her vision on a massive scale, but it was also a chance to fundamentally change how Premier Financial operated. "I'll need complete authority over the implementation," she said finally. "No interference from existing department heads, no resistance from legacy staff, and no compromises on our core principles." Marcus nodded. "Done. And I'll need a seat on the executive committee," Sarah continued. "If I'm going to be responsible for transforming the entire lending operation, I need to be part of the strategic decision-making process." Marcus hesitated for a moment. The executive committee was Premier Financial's inner circle, 5 senior executives who effectively ran the company. Adding Sarah would make her one of the most powerful people in the organization. "I'll need to clear that with the board," he said finally. "Then clear it," Sarah replied. "Because without that authority, this initiative will fail. And given your current regulatory situation, I don't think you can afford another failure." The board meeting was held the following Tuesday in Premier Financial's executive boardroom. Sarah had spent the weekend preparing a comprehensive presentation that outlined her vision for the company's transformation. She walked into the room carrying a confidence that had been hard-earned over the past year. The board members were an intimidating group, 7 men and 1 woman, all over 50, all with decades of experience in traditional banking. Sarah was younger than any of them, had less experience than all of them, and was proposing to completely restructure their business model. "Ladies and gentlemen," Sarah began, clicking to her first slide, "Premier Financial is at a crossroads. We can continue operating with the same practices that have led to regulatory investigations and declining market share, or we can embrace a new approach that positions us as leaders in the evolving financial services industry." For the next 45 minutes, Sarah laid out her case with mathematical precision and strategic clarity. She showed how Brooklyn Capital Solutions' approach could be scaled across Premier Financial's entire operation, demonstrated the potential for increased profitability and reduced regulatory risk, and outlined a timeline for implementation that was ambitious but achievable. "The numbers don't lie," she concluded, displaying her final slide. "Our inclusive lending practices don't just comply with regulations, they generate superior returns. When you serve underserved markets effectively, you capture growth that your competitors are ignoring." The room was silent for a moment as the board members absorbed her presentation. Finally, the chairman spoke. "Ms. Mitchell, this is a comprehensive proposal, but implementing it would require significant changes to our organizational structure and corporate culture." Are you confident that you can manage such a transformation? Sarah looked around the room, meeting each board member's gaze. 6 months ago, I was told that women aren't suited for finance. Today, I'm running the most profitable division in this company. If I can prove that assessment wrong, I can prove that Premier Financial can change too. The board voted unanimously to approve her proposal. Sarah Mitchell was named Executive Vice President of Lending Operations, making her the youngest EVP in Premier Financial's history and the first woman to hold that position. More importantly, she was now in a position to implement the changes she had always envisioned. The transformation of Premier Financial began immediately. Sarah assembled a team of change management specialists, technology consultants, and training experts to implement her vision across the organization. It was a massive undertaking, retraining hundreds of employees, upgrading technology systems, and restructuring entire departments. The resistance was immediate and intense. Senior loan officers who had been with the company for decades bristled at being told to change their practices by someone they viewed as an outsider. Department heads who had built their careers on traditional banking methods resented having their authority superseded by Sarah's initiatives. "They're calling it the Mitchell Revolution behind your back," Elena reported during one of their weekly strategy sessions. "And not in a good way." "Let them," Sarah replied. Results speak louder than office politics. The first major test came when Sarah decided to overhaul Premier Financial's commercial real estate lending practices. The department was run by Richard Brennan, a 25-year veteran who had personally originated over $2 billion in loans during his career. He was also one of the most vocal opponents of Sarah's reforms. "Ms. Mitchell," Richard said during a heated meeting in her office, "I've been making real estate loans since before you graduated from college. I don't need some startup founder telling me how to assess commercial properties." "Mr. Brennan," Sarah replied evenly, "your department has a default rate that's 40% higher than industry average, and 3 of your largest loans from last year are currently in default. Maybe it's time to consider a different approach." Richard's face flushed red. "Those defaults were due to market conditions beyond our control." "No, they were due to poor risk assessment," Sarah corrected. "You approved loans for borrowers who clearly couldn't service the debt, and you ignored warning signs that should have been obvious to any competent underwriter." The confrontation escalated quickly, with Richard storming out of the office and threatening to resign. Sarah let him go, knowing that the conversation was about more than just lending practices. It was about power, respect, and the changing nature of the financial services industry. Richard submitted his resignation letter the next day, followed by 2 other senior executives who couldn't accept the new reality. Sarah replaced them with younger, more adaptable managers who embraced her vision and implemented her standards. Within 60 days, Premier Financial's commercial real estate department was operating under completely different principles. Risk assessment became more comprehensive, client service improved dramatically, and loan quality increased measurably. The transformation wasn't just operational, it was cultural. Sarah instituted regular training programs on unconscious bias, created mentorship opportunities for women and minorities, and established performance metrics that rewarded inclusive practices. She also implemented transparency measures that made it harder for discriminatory practices to survive undetected. By the end of the quarter, the results were undeniable. Premier Financial's overall loan portfolio performance had improved across every metric. Default rates were down, customer satisfaction was up, and the company was attracting new clients at a pace that exceeded their most optimistic projections. More importantly, the regulatory pressure was beginning to ease. The Consumer Financial Protection Bureau acknowledged Premier Financial's efforts to address discriminatory practices, and several pending lawsuits were settled out of court with relatively favorable terms. "The board is ecstatic," Marcus reported during their monthly executive meeting. "Stock price is up 12% since you took over lending operations, and analysts are upgrading their recommendations based on our improved performance metrics." Sarah nodded, but her attention was focused on a different set of numbers. She had been quietly monitoring Premier Financial's mortgage lending portfolio, paying particular attention to high-value loans that might present interesting opportunities. "Marcus," she said, "I'd like to discuss our mortgage servicing operations." "What about them?" "I think there are some efficiency improvements we could implement," Sarah replied. Maybe we could schedule a separate meeting to go over the details. Marcus agreed, unaware that Sarah's interest in mortgage servicing had nothing to do with operational efficiency. She had found something in Premier Financial's loan portfolio that would change everything, not just for her, but for Marcus Hartwell himself. That evening, Sarah stayed late in the office, poring over mortgage records and payment histories. What she was looking for was specific, and when she found it, she had to read the documents 3 times to make sure she wasn't imagining things. Marcus Hartwell's personal mortgage was held by Premier Financial. Not just any mortgage. A $2.3 million jumbo loan on his house in Westchester County, secured at an interest rate that was well below market value thanks to his employee discount. The loan originated 4 years ago, and the current balance was $1.8 million. But more interesting than the loan itself was the payment history. Marcus had been late on his mortgage payment 6 times in the past 18 months, and he was currently 30 days behind on his most recent payment. His debt-to-income ratio was precarious, and his credit score had dropped significantly due to several missed payments on other obligations. Sarah leaned back in her chair, processing the implications. Marcus Hartwell, the man who had once lectured her about masculine energy and killer instincts, was financially overextended and struggling to manage his own debt obligations. She thought about the conversation they had had earlier that day, about Premier Financial's need to demonstrate improved risk management practices. She thought about the regulatory scrutiny the company was facing, and the pressure to eliminate any practices that could be seen as preferential treatment. And she thought about the employee handbook that clearly stated that all company loans were subject to the same underwriting standards as external clients. Sarah opened her laptop and began typing a memo to the executive committee. The subject line read, "Recommended Review of Employee Lending Practices." She was about to give Marcus Hartwell a lesson in the consequences of poor risk assessment. And this time, she would be the one holding all the cards. The memo was delivered to the executive committee the following morning. It was professionally written, thoroughly researched, and completely devastating in its implications. Sarah had identified 17 employee loans that failed to meet Premier Financial's current underwriting standards. The loans ranged from small personal loans to large mortgages, and they represented a total exposure of $12.7 million. More importantly, they represented a potential regulatory liability that could undermine Premier Financial's efforts to demonstrate improved compliance practices. In light of our ongoing regulatory review, Sarah's memo concluded, I recommend that we conduct a comprehensive audit of all employee lending practices and bring any substandard loans into compliance with our current standards. This would demonstrate our commitment to consistent risk management practices across all client relationships. The memo didn't mention Marcus Hartwell by name, but anyone who reviewed the list of problematic loans would immediately recognize the implications. Sarah had effectively forced the board to choose between protecting their senior executive and maintaining their regulatory compliance efforts. The executive committee meeting was scheduled for the following Friday. Sarah spent the week preparing for what she knew would be a difficult conversation, but she also spent time thinking about the larger implications of what she was about to do. This wasn't just about revenge, though she couldn't deny that element was present. It was about accountability, about the principle that rules should apply equally to everyone, and about the fundamental question of whether Premier Financial was serious about changing its culture. As she prepared for the meeting, Sarah reflected on the journey that had brought her to this moment. A year ago, she had been an unemployed job seeker who couldn't get a second interview. Now she was about to potentially end the career of the man who had dismissed her as unsuitable for finance. Thalem. The transformation was complete, but the real test was just beginning. The executive boardroom felt different on Friday morning. Sarah arrived early, her presentation materials organized, and her strategy clear. She had spent the previous night rehearsing her talking points, but more importantly, she had spent it considering the ethical implications of what she was about to do. The board members filed in one by one, each carrying copies of her memo and wearing expressions that ranged from curious to concerned. Marcus entered last, his usual confident demeanor replaced by something more guarded. He had clearly read the memo and understood its implications. Ladies and gentlemen, Chairman Robert Wesley began, we're here to discuss Ms. Mitchell's recommendation regarding employee lending practices. Sarah, Would you like to present your findings? Sarah stood, clicking to her first slide. Thank you, Mr. Chairman. As you know, Premier Financial is currently under regulatory scrutiny for our lending practices. One area that hasn't received adequate attention is our internal loan portfolio, loans made to employees and their families. She walked through her analysis methodically, showing how 17 different employee loans failed to meet current underwriting standards. The loans had originated under previous policies, but they now represented compliance risks that could undermine Premier Financial's efforts to demonstrate improved practices. The total exposure is $12.7 million, Sarah continued, but the regulatory risk is potentially much higher. If investigators discover that we're applying different standards to internal versus external clients, it could be seen as evidence of preferential treatment and inconsistent risk management. Board member Patricia Hoffman raised her hand. What do you recommend as a solution? 3 options, Sarah replied, advancing to her next slide. First, we could require all substandard employee loans to be brought into compliance with current standards through additional collateral, co-signers, or modified terms. Second, we could offer employees the opportunity to refinance these loans through external lenders. Third, we could call the loans due and allow employees to seek alternative financing. The room was silent as the board members absorbed the implications. Everyone understood that the largest and most problematic loan on the list belonged to Marcus Hartwell, but no one wanted to address that fact directly. Ms. Mitchell, board member David Chen said carefully, "These loans originated under policies that were in effect at the time. Is it fair to retroactively apply new standards?" Mr. Chen, fairness isn't the primary consideration here, Sarah replied. Regulatory compliance is. We've committed to demonstrating consistent risk management practices across all our operations. Internal loans that don't meet those standards represent a direct contradiction to that commitment. Marcus finally spoke, his voice carefully controlled. Sarah, I appreciate your thoroughness, but some of these loans involve personal financial situations that are more complex than your analysis suggests. Perhaps we could handle this on a case-by-case basis. Sarah turned to face him directly. Mr. Hartwell, with respect, complexity doesn't change the fundamental risk profile. Either a loan meets our standards or it doesn't. Either we apply consistent criteria or we don't. The tension in the room was palpable. Everyone understood that this was about more than just lending policies. It was about power, accountability, and the credibility of Premier Financial's transformation efforts. Chairman Wesley cleared his throat. I think we need to approach this systematically. Ms. Mitchell, I'm authorizing you to conduct a comprehensive review of all employee lending relationships. You'll work with our legal and compliance teams to determine the best path forward for each situation. Sarah nodded. I'll need complete access to all loan files, payment histories, and related documentation. You'll have it, Wesley confirmed. I want a full report within 2 weeks. As the meeting concluded, Sarah gathered her materials and headed for the door. Marcus intercepted her in the hallway. Sarah, we need to talk, he said quietly. Of course, she replied. My office or yours? Mine. Now. Marcus closed his office door and gestured for Sarah to sit, but she remained standing. The power dynamic in the room had shifted dramatically since their first meeting, and both of them knew it. What exactly are you trying to accomplish here? Marcus asked, his facade of professional courtesy finally cracking. I'm trying to ensure that Premier Financial operates with consistent standards across all client relationships, Sarah replied evenly. Isn't that what you asked me to do? Don't play games with me, Marcus snapped. You know exactly what you're doing. You've identified my personal mortgage and you're using it to settle some kind of score. Sarah's expression remained neutral. Mr. Hartwell, I identified 17 problematic loans. Your mortgage just happens to be one of them. Happens to be? Marcus's voice rose. You expect me to believe this is just a coincidence? I expect you to understand that your personal financial situation doesn't exempt you from the same standards we apply to everyone else, Sarah replied. You've been late on 6 payments in the past 18 months. Your debt-to-income ratio exceeds our guidelines by 23%. Your credit score has dropped 40 points since the loan was originated. By any objective measure, your mortgage represents a higher risk than we would accept from an external client. Marcus stared at her, his face flushed with anger and embarrassment. You have no idea what you're talking about. My financial situation is temporary. I have income streams that aren't reflected in traditional credit reports. Then you should have no problem documenting those income streams and bringing your loan into compliance, Sarah said. Unless, of course, they don't actually exist. The accusation hung in the air like a challenge. Marcus's hands clenched into fists, and for a moment Sarah wondered if he might actually lose control completely. You're making a mistake, he said finally, his voice low and dangerous. You think you're untouchable because you've had some success with your little lending operation. But I've been at this company for 15 years. I have relationships, influence, connections that you can't even imagine. And yet here we are, Sarah replied. You're facing potential foreclosure on your personal residence, and I'm the one conducting the review that will determine your financial future. Marcus's eyes widened as the full implications of the situation hit him. You can't be serious. I'm completely serious, Sarah said. Your mortgage payment is 67 days overdue as of this morning. Under Premier Financial's current policies, that triggers an automatic review for acceleration. If you can't bring the loan current or provide adequate additional collateral, we'll have no choice but to begin foreclosure proceedings. You're talking about my home, Marcus said, his voice barely above a whisper. My family's home. I'm talking about a non-performing asset in Premier Financial's portfolio, Sarah replied. The same way you talked about Maria Santos's catering business, or the dozens of other small businesses you've foreclosed on over the years. Marcus slumped into his chair, the fight going out of him. What do you want? I want you to experience what it feels like to be judged by standards you can't meet, Sarah said. I want you to understand what it's like to have your future decided by someone who doesn't think you're qualified for success. Over the next 10 days, Sarah conducted the most thorough financial investigation of her career. She reviewed every document, analyzed every payment history, and interviewed every relevant employee. What she discovered was a pattern of preferential treatment that went far beyond simple policy violations. Employee loans had been approved with minimal documentation, below-market interest rates, and repayment terms that would never have been offered to external clients. Several loans had been modified or restructured to avoid default, and some had been quietly refinanced through affiliated institutions to keep them off Premier Financial's official books. But Marcus's situation was by far the most egregious. His original loan application had been approved despite a debt-to-income ratio that exceeded guidelines, and his subsequent payment problems had been quietly overlooked by the loan servicing department. More damaging, Sarah discovered that Marcus had received 2 undisclosed loan modifications that had never been properly documented or approved by the appropriate committees. This is a mess, Elena said, reviewing Sarah's findings. If the regulators see this, it's going to look like systemic corruption. It is systemic corruption, Sarah replied. The question is what we do about it. Jennifer looked up from her laptop, where she was analyzing the public relations implications. If this gets out, it could derail everything we've accomplished. The media will have a field day with stories about executive privilege and double standards. Which is exactly why we need to handle it properly, Sarah said. We're going to follow the same procedures we would use for any other client. No special treatment, no exceptions, no behind-the-scenes deals. Amanda frowned. Are you sure about this? Marcus still has influence with the board. If you push too hard, he might find a way to retaliate. Sarah considered the warning. Marcus did have allies within the organization, and there were board members who might be sympathetic to his situation. But she also knew that Premier Financial couldn't afford another scandal, especially one that involved executive misconduct. Let me worry about Marcus, she said finally. Right now, I need to focus on presenting my findings to the board. Sarah's report was delivered to the executive committee on the following Monday. It was 47 pages long, meticulously documented, and absolutely devastating in its conclusions. She had identified not just the 17 problematic loans, but a systemic pattern of preferential treatment that had been operating for years. The report included specific recommendations for each loan, ranging from immediate repayment demands to foreclosure proceedings. It also recommended disciplinary action for several employees who had participated in the preferential treatment scheme, including Marcus Hartwell. The evidence is clear, Sarah wrote in her executive summary. Premier Financial has been operating a two-tier lending system that provides preferential treatment to employees while imposing stricter standards on external clients. This practice violates our stated policies, creates significant regulatory risk, and undermines our credibility as a reformed institution. The board meeting to discuss the report was scheduled for Wednesday morning. Sarah spent Tuesday preparing for what she knew would be the most important presentation of her career. The boardroom was packed for Wednesday's meeting. In addition to the regular board members, representatives from the legal department, compliance team, and human resources were present. The atmosphere was tense, with everyone understanding that the decisions made in this room would determine Premier Financial's future. Chairman Wesley called the meeting to order and asked Sarah to present her findings. She walked through her analysis systematically, showing how the preferential lending practices had evolved over time and highlighting the specific violations that had been uncovered. The most significant case involves a $1.8 million mortgage that is currently 67 days past due, Sarah said, displaying the relevant slide. The borrower has missed 6 payments in the past 18 months, and his debt-to-income ratio exceeds our guidelines by 23%. Under our current policies, this loan should have been called due 30 days ago. Board member Patricia Hoffman raised her hand. What are your specific recommendations? I recommend immediate acceleration of the loan, Sarah replied. The borrower should be given 30 days to bring the loan current, including all past due payments and penalties. If he cannot comply, we should begin foreclosure proceedings. The room was silent as everyone absorbed the implications. Marcus Hartwell, who was present for the meeting, looked pale and defeated. Ms. Mitchell, he said finally, you're recommending that the company foreclose on my home. Sarah looked at him directly. Mr. Hartwell, I'm recommending that the company treat your loan the same way we would treat any other non-performing asset. If you were an external client with this payment history, foreclosure proceedings would have begun weeks ago. Marcus turned to the board chairman. Bob, you know my situation. I've been dealing with some temporary cash flow issues, but I have significant equity in the property. I'm not a flight risk. Marcus, Chairman Wesley replied, the issue isn't your personal circumstances. The issue is whether Premier Financial is going to apply consistent standards to all our clients. Sarah is right. If this were an external loan, we would have already begun foreclosure proceedings. But it's not an external loan, Marcus protested. I've been with this company for 15 years. I've generated hundreds of millions in revenue. Doesn't that count for something? Sarah stepped forward. Mr. Hartwell, 6 months ago you told me that finance wasn't suited for people like me. You said that women were too emotional and didn't have the killer instinct for this business. You specifically said that leadership in finance requires masculine energy. Marcus's face reddened. Sarah, that was your professional assessment, Sarah interrupted. And now I'm giving you my professional assessment. Your loan is in default, you represent an unacceptable credit risk, and Premier Financial should protect its interests by foreclosing on your property. The room erupted in murmurs and whispered conversations. Board members exchanged glances, clearly uncomfortable with the personal nature of the confrontation, but unable to argue with Sarah's logic. Chairman Wesley called for order. I think we need to take a brief recess to consider our options. As the board members filed out for their private discussion, Sarah remained in her seat, watching Marcus gather his materials with shaking hands. She felt no satisfaction in his humiliation, but she also felt no regret. This was exactly the kind of accountability that Premier Financial needed if it was going to rebuild its reputation and culture. The real question was whether the board would have the courage to follow through on their commitment to consistent standards, or whether they would find a way to protect their colleague at the expense of their principles. In 20 minutes, Sarah would have her answer. The executive boardroom felt electric with tension as the board members returned from their private conference. Sarah watched their faces carefully, looking for clues about the decision they had reached. Chairman Wesley's expression was unreadable, Patricia Hoffman looked troubled, and David Chen appeared resigned to whatever outcome they had chosen. Marcus sat at the opposite end of the table, his usual commanding presence replaced by the hunched posture of a man awaiting judgment. His hands were clasped tightly in front of him, knuckles white with tension. After careful consideration, Chairman Wesley began, the board has reached several conclusions regarding the employee lending situation. Sarah felt her heart rate accelerate. Everything she had worked for over the past year could be decided in the next few minutes. First, we acknowledge that Ms. Mitchell's investigation has uncovered serious compliance issues that require immediate action. The pattern of preferential treatment she documented is unacceptable and must be addressed comprehensively. Marcus's shoulders sagged slightly, but he maintained his composure. Second, we recognize that consistent application of our lending standards is essential for maintaining regulatory compliance and institutional credibility. We cannot have different rules for employees versus external clients. Sarah allowed herself a moment of cautious optimism. The board was accepting her recommendations, at least in principle. However, Wesley continued, and Sarah felt her stomach tighten. We also recognize that these situations involve complex personal circumstances that developed over time under previous policies. Therefore, we've decided to implement a graduated approach. Sarah's optimism began to fade. A graduated approach usually meant compromise, and compromise in this situation would undermine everything she had fought to achieve. For the majority of the problematic loans, Wesley continued, we will require immediate compliance with current standards through additional collateral, co-signers, or modified terms. Employees who cannot meet these requirements will have 90 days to secure alternative financing. And for the more significant cases? Sarah asked, though she already suspected what was coming. For loans exceeding $1 million, Wesley replied, we will offer a structured workout program that allows borrowers to cure their defaults over an extended period, provided they can demonstrate adequate income and collateral. Sarah felt a flash of anger. They were creating a special category that would protect Marcus while allowing them to claim they were applying consistent standards. Mr. Chairman, she said carefully, with respect, a structured workout program for large loans sounds like exactly the kind of preferential treatment we're trying to eliminate. Patricia Hoffman leaned forward. Ms. Mitchell, we appreciate your concerns, but we have to balance compliance requirements with practical considerations. Foreclosing on executive-level employees could create significant disruption to our operations. More disruption than regulatory sanctions for discriminatory practices? Sarah countered. David Chen spoke up. Sarah, you've made your point effectively. The board has heard your recommendations, and we've made our decision. The structured workout program will be available to all employees, with loans exceeding $1 million, not just executives. It was a clever modification, but Sarah recognized it for what it was, a way to protect Marcus while maintaining the appearance of fairness. She suspected that very few non-executive employees had loans exceeding $1 million. What are the specific terms of this workout program? She asked. Marcus finally spoke, his voice hoarse but hopeful. I think we should develop those terms carefully, in consultation with our legal and compliance teams. Sarah turned to face him directly. Mr. Hartwell, you'll forgive me if I'm skeptical about your ability to participate objectively in designing a program that directly benefits your personal situation. The comment landed like a physical blow. Marcus's face flushed red, and several board members shifted uncomfortably in their seats. Ms. Mitchell, Chairman Wesley said sharply, that's enough. We've made our decision. I understand, Sarah replied, but I want to be clear about something. If we implement this graduated approach, we're sending a message that Premier Financial still operates with different standards for different people. That message will be noted by regulators, by the media, and by our clients. We're willing to accept that risk, Wesley said firmly. Sarah nodded, but her mind was already racing ahead to the next phase of her strategy. The board had made their choice, but they hadn't considered all the implications of that choice. 3 days later, Sarah sat in her office reviewing the proposed terms of the structured workout program. The document was 12 pages long and filled with complex provisions that essentially gave qualifying borrowers 2 years to cure their defaults while maintaining their existing payment schedules. Elena knocked on her door and entered with a cup of coffee and a puzzled expression. I've been reviewing the workout program, she said, and I have to admit it's actually not as bad as I expected. What do you mean? Sarah asked. The terms are strict enough to prevent abuse, but flexible enough to provide genuine relief for borrowers who can demonstrate legitimate hardship. Elena replied. It's actually a pretty sophisticated approach to loan modification. Sarah studied the document more carefully. Elena was right. The workout program was well designed and would probably be effective for borrowers who were genuinely committed to resolving their financial difficulties. The problem isn't the program itself, Sarah said finally. The problem is that it's being created specifically to protect Marcus Hartwell. Does that matter if it's a good program? Elena asked. Sarah considered the question. Her initial instinct was to oppose anything that benefited Marcus, but she had to acknowledge that the workout program could actually serve Premier Financial's interests while maintaining compliance with regulatory requirements. Maybe not, she admitted, but I want to make sure that Marcus actually complies with the program requirements. Elena smiled. I was hoping you'd say that. I've been analyzing his financial situation in detail, and I think we can structure the workout terms to be quite demanding. How demanding? Well, the program requires quarterly financial reporting, annual appraisals of collateral property, and automatic acceleration if the borrower misses any payments during the workout period, Elena explained. It also requires borrowers to maintain minimum cash reserves and debt-to-income ratios. Sarah's interest was piqued. What's Marcus's current debt-to-income ratio? Borderline, Elena replied. If his income drops by more than 15%, or if he takes on any additional debt, he'll be in violation of the workout terms. And if he violates the workout terms? Immediate foreclosure. No additional negotiations, no second chances. Sarah smiled for the first time in days. The board thought they had protected Marcus, but they had actually created a framework that would hold him more accountable than a traditional loan modification. Elena, I think we need to make sure that Marcus's workout agreement is structured very carefully. The workout negotiation took place in Premier Financial's largest conference room, with representatives from legal, compliance, and senior management present. Marcus sat at one end of the table flanked by his personal attorney and financial advisor, while Sarah sat at the other end with her team. The atmosphere was formal but tense, with everyone understanding that they were negotiating not just a loan modification, but the future relationship between Sarah and Marcus. Let's start with the financial reporting requirements, Sarah said, opening the discussion. The standard workout program requires quarterly reporting, but given the size of this loan and the borrower's payment history, I'm recommending monthly reporting for the first year. Marcus's attorney, a silver-haired man named William Patterson, immediately objected. Monthly reporting is excessive for a borrower with Mr. Hartwell's experience and standing in the industry. Mr. Patterson, Sarah replied, monthly reporting is standard for borrowers who have missed 6 payments in 18 months. Mr. Hartwell's standing in the industry doesn't change his payment history. The negotiation continued for 3 hours, with Sarah and her team pushing for strict terms, while Marcus's representatives tried to minimize the reporting requirements and compliance obligations. By the end of the session, they had reached an agreement that satisfied Premier Financial's requirements while providing Marcus with a realistic path to resolve his default. The final terms were demanding but fair. Marcus would have 24 months to cure his default, with monthly financial reporting for the first year and quarterly reporting thereafter. He would be required to maintain a debt-to-income ratio below 45% and liquid reserves equivalent to 6 months of mortgage payments. Any violation of these terms would trigger immediate foreclosure proceedings. I think we have a deal, Chairman Wesley said as the session concluded. Marcus looked exhausted but relieved. Thank you for working with me on this, he said to the room in general. Sarah gathered her materials and prepared to leave, but Marcus intercepted her at the door. Sarah, I want to talk to you privately, he said. Of course. They walked to a small conference room down the hall, where Marcus closed the door and turned to face her. I know what you're thinking, he said. You're thinking that I got special treatment because of my position. Did you? Sarah asked. Marcus was quiet for a moment. Maybe, but I also think you pushed for terms that are stricter than they needed to be. The terms are appropriate for a borrower with your risk profile, Sarah replied. If anything, they're more generous than what we would offer to an external client. That's not what I mean, Marcus said. I mean you're holding me to a higher standard because of our history. Sarah studied his face, looking for signs of sincerity or manipulation. Marcus, I'm holding you to the same standard I would hold anyone else. The difference is that you're not used to being held to any standard at all. Marcus flinched, as if she had slapped him. You really think I'm that corrupt? I think you're accustomed to a system that gave you advantages you didn't earn, Sarah replied. Now you're experiencing what it's like to be judged purely on your performance. And if I fail to meet these terms, then you'll lose your house, Sarah said simply. Just like any other borrower who defaults on their loan. Marcus stared at her for a long moment, then nodded slowly. I understand. Good, Sarah said. Because I'll be personally monitoring your compliance with the workout agreement. Over the next 6 months, Sarah received monthly reports on Marcus's financial situation. The reports painted a picture of a man struggling to maintain his lifestyle while meeting his modified loan obligations. Marcus had been forced to sell his vacation home in the Hamptons to raise cash, and he had taken his children out of private school to reduce expenses. His wife had returned to work as a real estate agent, and the family had eliminated most of their discretionary spending. His debt-to-income ratio is holding steady at 43%, Elena reported during one of their monthly reviews. He's meeting all his payment obligations, but there's no margin for error. What about his liquid reserves? Sarah asked. Barely adequate, Elena replied. He's maintaining the minimum required balance, but any unexpected expense could put him in violation. Sarah studied the reports with mixed feelings. Part of her was satisfied to see Marcus experiencing the financial stress that his lending decisions had imposed on countless other families. But another part of her recognized that he was genuinely trying to comply with the workout terms. He's actually doing better than I expected, Jennifer observed. A lot of borrowers in his situation would have given up by now, or found a way to manipulate the system, Amanda added. But the monthly reporting makes it impossible to hide anything. Sarah had to admit that Marcus was demonstrating more discipline and accountability than she had anticipated. The workout program was working exactly as designed, holding him to high standards while providing a realistic path to resolution. Let's continue monitoring, she decided. But I want to increase the frequency of our reviews. If he's going to fail, I want to know about it immediately. The test came in month 8 of the workout program. Marcus's monthly financial report showed a significant drop in his income due to a reduction in his bonus compensation, which had been tied to Premier Financial's overall performance. His debt-to-income ratio had jumped to 47%, putting him in violation of the workout terms. Sarah received the report on a Friday afternoon and immediately called a meeting with her team to discuss the situation. Technically, this is a default, Elena said, reviewing the numbers. His debt-to-income ratio exceeds the maximum allowed under the workout agreement. But the income reduction wasn't his fault, Jennifer pointed out. Company bonuses were cut across the board due to regulatory expenses. The workout agreement doesn't include exceptions for circumstances beyond the borrower's control, Amanda observed. A default is a default. Sarah sat quietly, considering her options. She could strictly enforce the workout terms and begin foreclosure proceedings, or she could exercise discretion and allow Marcus to modify the agreement to account for his reduced income. The decision would test not only her commitment to consistent standards, but also her ability to separate personal feelings from professional judgment. What would we do for any other borrower in this situation? She asked finally. It depends on the borrower's overall financial picture, Elena replied. If they had adequate liquid reserves and a plan to restore their income, we might consider a short-term modification. And if they didn't? We'd begin foreclosure proceedings, Elena said simply. Sarah opened Marcus's file and reviewed his complete financial situation. His liquid reserves were adequate but not strong, and his plan to restore his income relied on Premier Financial's performance improving over the next several quarters. Set up a meeting with Marcus and his attorney, she decided. We need to discuss his options. The meeting took place the following Monday in Sarah's office. Marcus looked haggard, with dark circles under his eyes and the posture of a man who hadn't been sleeping well. His attorney, William Patterson, appeared equally stressed. Mr. Hartwell, Sarah began, your monthly report shows that you're in violation of the workout agreement. Your debt-to-income ratio has exceeded the maximum allowed threshold. Marcus nodded grimly. I know. The bonus reduction caught me off guard. The workout agreement doesn't include provisions for income reductions, regardless of the cause, Sarah continued. Technically, we could begin foreclosure proceedings immediately. Marcus's wife, Catherine, who had been sitting quietly beside him, spoke up for the first time. Ms. Mitchell, please. We've been doing everything we can to comply with the agreement. This isn't our fault. Sarah looked at Catherine Hartwell, a woman in her early 40s who had been forced to rebuild her career after years of being a stay-at-home mother. She saw something of herself in Catherine's desperation and determination. Mrs. Hartwell, I understand your situation, Sarah said gently, but the workout agreement exists to protect Premier Financial's interests, not to guarantee your family's financial security. What are our options? Marcus asked. Sarah opened her portfolio and pulled out a document she had prepared. I'm prepared to offer you a modified workout agreement that takes into account your reduced income. The new terms would extend the workout period to 36 months and reduce the required debt-to-income ratio to 50%. Marcus's face showed a mixture of relief and suspicion. What's the catch? The catch is that this is your final modification, Sarah replied. If you violate these terms for any reason, foreclosure proceedings will begin immediately. No negotiations, no appeals, no second chances. Marcus exchanged glances with his wife and attorney, then nodded slowly. I understand. There's one more thing, Sarah said. I want a personal acknowledgement from you that you understand the impact of your previous lending decisions on families like yours. Marcus looked confused. I don't understand. I want you to acknowledge that the fear and stress you're experiencing right now is the same fear and stress that your lending decisions imposed on hundreds of other families, Sarah explained. I want you to understand that financial power comes with responsibility. Marcus was quiet for a long moment, then nodded. I understand. And I'm sorry. Sarah studied his face, looking for signs of insincerity. What she saw was genuine remorse, and a man who had been fundamentally changed by his experience. Then we have a deal, she said, extending her hand. As Marcus shook her hand, Sarah realized that she had achieved something more valuable than revenge. She had created accountability, demonstrated the importance of consistent standards, and possibly even helped Marcus become a better leader. The real transformation wasn't just in Premier Financial's lending practices, it was in the people who worked there. 18 months after Sarah Mitchell had first walked into Premier Financial's headquarters as a desperate job seeker, she stood in the same boardroom receiving news that would reshape the entire financial industry. The Consumer Financial Protection Bureau had just released their final report on Premier Financial's lending practices, and the results exceeded everyone's most optimistic expectations. The CFPB has officially closed their investigation, announced General Counsel Rebecca Torres, holding up a thick document with the agency's seal. Not only are we cleared of all discrimination charges, but they're citing Premier Financial as a model for inclusive lending practices. The room erupted in applause, but Sarah remained focused on the implications. This wasn't just a victory for Premier Financial. It was validation of everything she had built over the past year and a half. More importantly, Rebecca continued, they're recommending that other financial institutions adopt what they're calling the Premier model for small business lending. The CFPB is hosting a symposium next month to showcase our practices to industry leaders nationwide. Chairman Wesley turned to Sarah with a broad smile. Congratulations, Sarah. This is your achievement. Sarah felt a moment of profound satisfaction, but it was tempered by the awareness that this was just the beginning. The real test would be whether she could scale her success beyond Premier Financial and create lasting change in the industry. Thank you, Mr. Chairman, she replied. But I think we need to discuss how we're going to handle the increased attention this will bring. The attention came faster than anyone expected. Within days of the CFPB announcement, Sarah was fielding calls from major financial publications, regulatory agencies, and competing banks. The Wall Street Journal wanted an exclusive interview, Forbes was preparing a cover story, and the Federal Reserve had requested a detailed briefing on Premier Financial's lending methodology. But the most intriguing call came from an unexpected source. Ms. Mitchell, this is Catherine Morrison from First National Bank, the voice on the phone said. I'm calling on behalf of our board of directors to discuss a potential opportunity. Sarah recognized the name immediately. First National Bank was one of the largest financial institutions in the country, with assets exceeding $800 billion in operations in 47 states. Catherine Morrison was their Chief Human Resources Officer and a member of the bank's executive committee. I'm listening, Sarah said. We've been following your work at Premier Financial very closely, Catherine continued. The board is impressed with your results and interested in discussing a senior executive position that would allow you to implement your lending model on a national scale. Sarah felt her pulse quicken. This was the kind of opportunity that could transform her from a regional success story into a national leader in financial services. What kind of position are you talking about? She asked. Executive Vice President of Consumer and Commercial Lending, Catherine replied. You would oversee a portfolio of over $200 billion in loans and manage a team of more than 3,000 employees. It's one of the most senior positions in the bank. The numbers were staggering. Sarah's current operation at Premier Financial, while successful, managed less than $2 billion in loans with a team of 150 people. First National was offering her the chance to operate at a completely different scale. I'd need to understand the scope of authority that would come with the position, Sarah said carefully. Complete operational control, Catherine replied. The board has authorized me to tell you that you would have full autonomy to implement your lending practices across our entire consumer and commercial portfolio. No interference from legacy management, no resistance from existing departments. It was exactly what Sarah had dreamed of, the chance to prove that her approach could work on a national scale and create lasting change in the industry. I'm interested, she said finally. When would you like to discuss this further? How about tomorrow afternoon? We can send a plane to pick you up. That evening, Sarah sat in her apartment staring at her laptop screen, which displayed First National Bank's annual report. The numbers were impressive. Consistent profitability, strong market share, and a reputation for stability. But she also knew that large institutions were notoriously resistant to change, and implementing her vision at First National would be exponentially more difficult than what she had accomplished at Premier Financial. Her phone rang, interrupting her thoughts. The caller ID showed Elena's number. I heard about the First National offer, Elena said without preamble. Are you seriously considering it? How did you— Never mind, Sarah replied. Yes, I'm considering it. This could be the chance to implement our model nationwide. Or it could be a chance to get buried in corporate bureaucracy and lose everything we've built, Elena countered. Sarah, you've seen what happens when talented people get absorbed by large institutions. They either get marginalized or they get corrupted. Sarah understood Elena's concern. The banking industry was littered with examples of successful executives who had been hired by large institutions, only to see their innovations diluted or abandoned entirely. What if I could negotiate the right terms? Sarah asked. Complete autonomy, guaranteed resources, board-level authority. You really think they'd honor those commitments once you're inside? Elena replied. These institutions have their own culture, their own way of doing things. You'd be fighting the same battles we fought at Premier Financial, except at 10 times the scale. Sarah was quiet for a moment, considering Elena's words. She had spent the past year and a half building a team, developing relationships, and creating a culture that supported her vision. Starting over at First National would mean rebuilding everything from scratch. On the other hand, Sarah said slowly, this could be the chance to create real systemic change. Instead of helping thousands of businesses, we could help millions. Both, Blackwood replied finally. We believe your vision can help First National grow and evolve. But we also believe that your involvement would demonstrate our commitment to inclusive practices. Sarah appreciated his honesty, but it also confirmed her suspicions. First National wanted to use her as a symbol without fully committing to the changes she represented. I need to think about this, she said finally. The position is attractive, but I need to be sure that we're aligned on expectations and authority. That evening, Sarah had dinner with Jonathan Blackwood and his wife at Charlotte's most exclusive restaurant. The conversation was relaxed and personal, giving Sarah a chance to understand the man behind the corporate title. Sarah, Jonathan said over dessert. I want to be completely honest with you. First National is at a crossroads. We're facing increased regulatory scrutiny, declining market share in key demographics, and pressure from investors to demonstrate growth. We need someone with your expertise and reputation to help us navigate these challenges. Sarah appreciated his candor, but she also recognized the enormous pressure that would come with the position. Jonathan, I've built my career on the principle that good banking is good business, she replied. But I've also learned that implementing change requires more than just good intentions. It requires institutional commitment and cultural transformation. Are you saying you don't think we're capable of that transformation? Jonathan asked. I'm saying that transformation is difficult, especially for institutions with deeply embedded cultures and practices, Sarah replied. The question is whether First National is willing to accept the temporary disruption that comes with fundamental change. Jonathan leaned back in his chair, considering her words. What would it take to convince you that we're serious about change? Sarah had been thinking about this question all day. I would want a contract that guarantees my authority for at least 3 years, regardless of short-term performance metrics. I would like board-level reporting and the ability to hire and fire senior staff in my division. And I would want a commitment from the board that they won't interfere with my operations for the first 18 months. Those are significant demands, Jonathan observed. They're necessary demands, Sarah replied. If you want superficial changes that look good in press releases, you can hire any consultant. If you want fundamental transformation that delivers lasting results, you need to be prepared to give someone the authority to make it happen. The next morning, Sarah received a call from Premier Financial's chairman, Wesley. His voice was unusually urgent. Sarah, I need to see you immediately. Can you come to my office? Sarah arrived at Wesley's office to find him pacing behind his desk, clearly agitated. I heard about the First National offer, he said without preamble. Before you make any decisions, I want to make you a counteroffer. Sarah settled into a chair, curious about what Wesley had in mind. The board met in an emergency session last night, Wesley continued. We've decided to promote you to Chief Executive Officer of Premier Financial. Sarah felt her breath catch. The offer was completely unexpected and potentially more significant than the First National position. CEO? She repeated. Full authority over all operations, complete autonomy to implement your vision across the entire institution, and a compensation package that's competitive with any major bank in the country, Wesley explained. We're also prepared to provide you with resources for a national expansion that would put Premier Financial in direct competition with institutions like First National. Sarah's mind raced as she considered the implications. The CEO position at Premier Financial would give her everything she had built over the past year and a half, plus the authority to scale it nationally. More importantly, it would allow her to maintain the team and culture she had created. Robert, this is a tremendous offer, she said finally. But Premier Financial is still a regional institution. The CEO position here doesn't have the same national platform as the EVP position at First National. Not yet, Wesley replied. But we're prepared to change that. The board has approved an aggressive expansion plan that would establish Premier Financial as a national player within 5 years. You would be leading that expansion. Sarah realized that she was facing a choice between 2 very different paths, taking over an existing national institution or building a new one from the ground up. Both offered the chance to implement her vision on a large scale, but they represented fundamentally different approaches to creating change. I need time to think about this, she said. Of course, Wesley replied, but I hope you'll consider that everything you've built is here at Premier Financial. Your team, your culture, your vision, it's all here. Why start over somewhere else when you can continue building on what you've already created? That night, Sarah sat in her apartment with Elena, Jennifer, and Amanda, discussing the 2 offers. The women who had bet their careers on her vision were now facing the possibility of seeing that vision implemented on a national scale. The First National position is prestigious, Jennifer said, but it's also risky. You'd be joining an institution with established practices and entrenched interests. The Premier Financial position is safer, Amanda added, but it's also more limited in scope. You'd be building something new, but starting from a smaller base. Elena had been quiet throughout the discussion, but finally spoke up. Sarah, there's something else you need to consider. This isn't just about your career anymore. You've proven that women can succeed in finance, but now you have the chance to prove that women can lead entire institutions. Sarah nodded, understanding the weight of Elena's words. Whatever decision she made would be scrutinized by the entire industry and would influence how future opportunities were offered to women in finance. There's one more factor, Sarah said finally. Marcus Hartwell. The three women looked at her curiously. If I take the CEO position at Premier Financial, Marcus will be reporting to me, Sarah explained. The man who once told me that women aren't suited for finance will be working for someone who has proved him wrong in the most dramatic way possible. Elena smiled. Now that would be poetic justice. Sarah made her decision that night and called both Jonathan Blackwood and Robert Wesley the next morning to inform them of her choice. The announcement was made the following week, and the financial industry took notice. Sarah Mitchell, the woman who had been rejected by every major bank in New York, was about to become the youngest CEO in Premier Financial's history. But more than that, she was about to prove that the future of finance belonged to leaders who understood that inclusion wasn't just morally right, it was strategically smart. Marcus Hartwell received the news in his office, staring at the press release that announced his former subordinate's promotion to the position that had once been his ultimate career goal. He thought about the conversation they had had 18 months ago, when he had dismissed her as unsuitable for finance. Now she was his boss, and he was about to discover what it meant to work for someone who had earned their authority through merit rather than circumstance. The main auditorium at Premier Financial's headquarters had been transformed for the occasion. 200 employees, board members, clients, and industry leaders filled the space, all gathered to witness something unprecedented in the company's 127-year history, the installation of Sarah Mitchell as Chief Executive Officer. Sarah stood backstage, adjusting her jacket one final time. The navy blue suit was the same one she had worn to her first interview with Marcus Hartwell, but everything else had changed. Where once she had been nervous and desperate, now she was confident and prepared. Where once she had been seeking validation, now she was ready to provide leadership. Are you ready for this? Elena asked, appearing beside her with a smile that mixed pride with anticipation. I've been ready for this my entire life, Sarah replied, and she meant it. The introduction was delivered by Chairman Wesley, who had announced his retirement the previous month. His words carried the weight of institutional change and personal recognition. Ladies and gentlemen, it is my honor to introduce a leader who has not only transformed Premier Financial, but has redefined what it means to be successful in the financial services industry. Please welcome the new Chief Executive Officer of Premier Financial, Sarah Mitchell. The applause was thunderous as Sarah walked onto the stage. She looked out at the audience and saw faces that represented her entire journey. Elena, Jennifer, and Amanda in the front row, beaming with pride. Board members who had initially been skeptical but were now true believers. Clients whose businesses had been transformed by her lending practices. And employees who had learned to embrace a new vision of banking. In the back of the auditorium, she spotted Marcus Hartwell. He was applauding politely, but his expression was complex, a mixture of resignation, respect, and something that might have been regret. Thank you, Sarah began, her voice carrying clearly through the auditorium. 2 years ago, I sat in a conference room in this building and was told that women weren't suited for finance. I was told that we were too emotional, too risk-averse, and lacked the killer instinct that this business requires. A ripple of uncomfortable laughter passed through the audience as people remembered the industry's not-so-distant past. Today, I stand before you as the CEO of an institution that has proven those assumptions wrong. We've demonstrated that inclusive practices aren't just morally right, they're strategically smart. We've shown that diversity of thought leads to better decision-making, and that serving underserved communities generates superior returns. Sarah paused, letting her words sink in before continuing. But this isn't just about proving people wrong. It's about proving what's possible when we remove barriers and create opportunities. It's about building an institution that serves all communities, supports all entrepreneurs, and creates prosperity for all stakeholders. She outlined her vision for Premier Financial's future, a national expansion that would bring inclusive lending practices to underserved communities across the country, technological innovations that would make banking more accessible and efficient, and cultural changes that would make the financial services industry more welcoming to diverse talent. The work we've done here at Premier Financial is just the beginning, Sarah concluded. We have the opportunity to transform not just our institution, but our entire industry. We have the chance to prove that when we expand our definition of who deserves access to capital, we expand our capacity to create economic growth. The standing ovation lasted for 5 minutes. Sarah looked out at the audience and felt a profound sense of accomplishment, but also a deep awareness of the responsibility that came with her new position. The following Monday, Sarah convened her first executive committee meeting as CEO. The conference room was filled with the senior leaders who would help her implement her vision across the organization. Marcus Hartwell sat at the far end of the table, his role as Senior Vice President of Commercial Real Estate, making him a reluctant but necessary participant in Sarah's leadership team. "Let's begin with our Q4 performance," Sarah said, opening the meeting with characteristic directness. "Elena, what do our numbers look like?" Elena, who had been promoted to Chief Financial Officer, presented results that exceeded even their most optimistic projections. Premier Financial had achieved record profits, expanded into 3 new states, and maintained default rates that were significantly below industry averages. "More importantly," Elena continued, "our customer satisfaction scores are the highest in the industry, and our employee retention rates have improved by 34% over the past year." Jennifer, now Chief Marketing Officer, reported on the company's growing national recognition. "We're receiving inquiries from potential clients in 12 states, and our brand recognition has increased by 89% in key demographic segments." Amanda, promoted to Chief Technology Officer, outlined the technical infrastructure that would support Premier Financial's national expansion. "Our platform can handle a 10-fold increase in transaction volume, and our mobile applications are receiving industry awards for user experience." Sarah listened to each report with satisfaction, but she was also keenly aware of the challenges that lay ahead. Scaling their success nationally would require not just operational excellence, but cultural transformation across a much larger organization. "Marcus," she said, turning to address him directly, "I'd like to hear your assessment of our commercial real estate portfolio." Marcus straightened in his chair, clearly uncomfortable with the attention. "Our portfolio performance has improved significantly under the new underwriting standards," he said carefully. "Default rates are down 23% year over year, and we're seeing increased demand from borrowers who were previously underserved." Sarah nodded, acknowledging his report while also noting the professional tone that had replaced his previous arrogance. "What about expansion opportunities?" she asked. Marcus hesitated for a moment, then spoke with growing confidence. "There are significant opportunities in secondary markets that have been ignored by larger institutions. Our inclusive approach gives us a competitive advantage in these communities." It was a thoughtful analysis that demonstrated Marcus's growing understanding of Sarah's vision. More importantly, it showed his willingness to adapt and contribute to the team's success. "Excellent," Sarah said. "I want you to develop a comprehensive plan for commercial real estate expansion in our target markets. Focus on communities that have been underserved by traditional lenders." Marcus nodded, and Sarah caught a glimpse of something in his expression that looked like genuine enthusiasm. The transformation was remarkable. The man who had once dismissed her as unsuitable for finance was now eagerly embracing her vision. Over the next 18 months, Premier Financial executed an aggressive expansion strategy that established the company as a national leader in inclusive lending. They opened offices in 12 new states, hired over 1,500 new employees, and originated more than $8 billion in loans to previously underserved communities. The expansion wasn't without challenges. Competing with established institutions required significant capital investment, and adapting their culture to new markets demanded careful management. But Sarah's team executed with precision, maintaining their core values while scaling their operations. The results were extraordinary. Premier Financial's loan portfolio grew by 340%, their market capitalization increased by 180%, and their reputation as an innovative leader in financial services attracted top talent from across the industry. More importantly, they were creating measurable impact in the communities they served. A study conducted by the Brookings Institution found that Premier Financial's lending practices had contributed to the creation of over 15,000 jobs and the establishment of more than 2,000 new businesses in underserved communities. "We're not just making loans," Sarah explained to a congressional committee that was studying inclusive lending practices. "We're making investments in economic opportunity. We're proving that when you expand access to capital, you expand economic growth." The testimony was broadcast live on financial news networks, and Sarah's words became a rallying cry for advocates of inclusive economic policy. She had evolved from a successful banker to a national voice for financial inclusion. 5 Chase. As Premier Financial's success grew, so did the attention paid to Sarah's personal story. The narrative of her rejection by Marcus Hartwell and subsequent rise to CEO became a symbol of both gender discrimination in finance and the power of perseverance. The story reached its climax when Forbes published a comprehensive profile titled, "The Woman Who Proved Finance Wrong." The article detailed Sarah's journey from unemployed job seeker to CEO of a national bank, but it also included extensive interviews with Marcus Hartwell about his role in her early struggles. "I was wrong," Marcus told the Forbes reporter. "I made assumptions based on outdated stereotypes, and I nearly prevented one of the most talented leaders in our industry from reaching her potential. Working for Sarah has been the most educational experience of my career." The article created a sensation in the financial industry, generating discussions about unconscious bias, inclusive leadership, and the importance of second chances. But for Sarah, the most significant impact was personal. Our Cree, Marcus requested a private meeting with her the day after the article was published. They met in Sarah's office, the same space where he had once held court as a senior executive. "Sarah, I want to apologize," Marcus said, his voice carrying a weight of genuine remorse. "Not just for what I said in that interview 2 years ago, but for the attitudes and assumptions that led to those words." Sarah studied his face, looking for signs of insincerity or self-interest. What she saw was a man who had been genuinely transformed by his experience. "Marcus, I appreciate your apology," she said finally. "But more than that, I appreciate the work you've done to change. You've become a valuable member of this team, and you've helped implement the vision you once dismissed. I want you to know that I've learned more about leadership and business from you than from anyone else in my career," Marcus continued. "You've shown me that true strength isn't about domination. It's about empowerment. You've taught me that the best leaders don't just succeed themselves. They create conditions for others to succeed." Sarah felt a moment of profound satisfaction, not because she had proven Marcus wrong, but because she had helped him become better. The transformation was mutual. She had grown from an ambitious individual contributor to a transformational leader, while he had evolved from a narrow-minded manager to a genuine advocate for inclusive practices. "Marcus, I want to ask you something," Sarah said. "What would you say to someone who told you that women aren't suited for finance?" Marcus smiled, and for the first time in their professional relationship, it was completely genuine. "I'd tell them to look at the results. I'd tell them about the most successful CEO I've ever worked for. I'd tell them that the future of finance belongs to leaders who understand that diversity isn't just morally right, it's strategically essential." By the end of her 3rd year as CEO, Sarah had achieved something unprecedented. She had transformed not just Premier Financial, but the entire conversation about inclusive lending in the financial services industry. Her success had inspired dozens of other institutions to adopt similar practices, and her methodologies were being taught in business schools across the country. The Federal Reserve invited her to serve on a task force studying financial inclusion, and she was asked to testify before Congress about the economic benefits of inclusive lending practices. Her influence extended far beyond Premier Financial, shaping policy discussions and industry standards. But the most significant recognition came from an unexpected source. The American Bankers Association, the industry's most prestigious trade organization, announced that Sarah would receive their Leadership Excellence Award, the highest honor bestowed on banking professionals. The award ceremony was held at the annual ABA conference in Chicago, with over 3,000 banking executives in attendance. Sarah's acceptance speech was carried live on multiple financial networks and would later be viewed by millions of people online. "When I started my career," Sarah said, looking out at the audience of industry leaders, "I was told that success in banking required a certain type of person, someone who was aggressive, ruthless, and willing to prioritize profits over people. I was told that women like me didn't have what it takes to succeed in this industry. She paused, letting the words sink in before continuing. But I've learned that true success in banking, sustainable, profitable, meaningful success, requires exactly the opposite qualities. It requires empathy, collaboration, and a commitment to serving all communities. It requires the wisdom to understand that when we expand opportunity for others, we expand prosperity for everyone. The speech received a standing ovation that lasted for nearly 10 minutes. Sarah looked out at the audience and saw faces that represented the future of finance. Young professionals who would build on her foundation, diverse leaders who would continue breaking barriers, and established executives who had learned to embrace change. 5 years after that humiliating interview in Marcus Hartwell's office, Sarah Mitchell stood in the boardroom of Premier Financial's new headquarters in New York City. The building was a testament to the company's growth and success. 42 floors of state-of-the-art office space that housed over 5,000 employees. Premier Financial had become one of the fastest-growing banks in the country, with operations in 37 states and a reputation as the industry leader in inclusive lending. Their success had proven that doing good and doing well weren't mutually exclusive. They were mutually reinforcing. Sarah's personal achievements were equally impressive. She had been named to Fortune's list of most powerful women in business, received honorary degrees from 6 universities, and been appointed to the boards of several major corporations. But her greatest satisfaction came from the changes she had helped create throughout the industry. Women and minorities now held senior positions at financial institutions across the country, many of them citing Sarah's example as inspiration for their own careers. Business schools were teaching case studies about Premier Financial's success, and regulatory agencies were adopting inclusive lending standards based on her methodologies. "Ma'am, your 4 o'clock appointment is here," her assistant announced through the intercom. Sarah looked up from her desk, where she had been reviewing applications for Premier Financial's new Executive Development Program, an initiative designed to identify and promote diverse talent throughout the organization. "Send them in," she said. The door opened and a young woman entered, nervous, eager, and carrying a leather portfolio that reminded Sarah of her own desperate job-hunting days. The woman was clearly intimidated by the imposing office and the reputation of the person she was meeting. "Ms. Mitchell, thank you for seeing me," the woman said, her voice slightly shaky. "I'm Jennifer Chen, and I'm here to interview for the Associate Director position in Commercial Lending." Sarah smiled, recognizing something of herself in the young woman's determination and anxiety. "Please, have a seat. Tell me about yourself." As Jennifer Chen began to speak, Sarah reflected on the journey that had brought her to this moment. She had started as someone seeking opportunity and had become someone who created opportunities for others. She had been told that women weren't suited for finance, and she had proven that the future of finance belonged to leaders who understood that success meant lifting others up, not holding them down. The circle was complete, but the work was just beginning. There were still barriers to break, still assumptions to challenge, and still opportunities to create. But now Sarah wasn't working alone. She was part of a movement that was transforming not just the financial industry, but the broader economy. As she listened to Jennifer Chen's presentation, Sarah thought about Marcus Hartwell's words from that interview years ago. "Sometimes you need to think more about your own reasons. Has your salary increased? Have you been working diligently? You're already in your 30s. Your work and family life are both a mess. That just shows your incompetence." Now, as CEO of a national bank, Sarah's salary had increased beyond what she had ever imagined. She had been working diligently, but on her own terms, and toward her own vision. She was still in her 30s, but her work life was thriving, and her family life, including the chosen family of colleagues who had become lifelong friends, was richer than ever. The incompetence Marcus had diagnosed in her had been revealed as incompetence in the system that had failed to recognize her potential. The killer instinct he had claimed women lacked had been redefined as the ability to create value for everyone, not just extract value for the few. Sarah Mitchell had not just proven Marcus Hartwell wrong. She had proven that the future of finance belonged to leaders who understood that true strength came from empowering others, that real success meant creating prosperity for all communities, and that the best way to prove your worth was to help others discover theirs. The woman who had once been told she wasn't suited for finance had become the person who was reshaping what finance could be. And that was the ultimate vindication, not just proving the doubters wrong, but proving that their entire conception of success had been wrong all along. 10 years after Sarah Mitchell first walked into Premier Financial's headquarters as a desperate job seeker, she stood in the same building as the CEO of one of the most successful and respected banks in the country. The institution she led had become a model for inclusive lending, an incubator for diverse talent, and a catalyst for economic opportunity in communities across the nation. Marcus Hartwell had become one of her most effective lieutenants, his transformation from skeptic to advocate serving as a powerful symbol of the industry's evolving culture. The man who had once dismissed her as unsuitable for finance now regularly spoke at conferences about the importance of inclusive leadership and the dangers of unconscious bias. But perhaps the most meaningful measure of Sarah's success was the message she received that morning from Maria Santos, the single mother who had been Brooklyn Capital Solutions' first client. Maria's catering business had grown into a regional restaurant chain, and she was now applying for a loan to open her 15th location. "Dear Ms. Mitchell," the message read, "I wanted to thank you for believing in me when no one else would. Your investment in my business changed my life, but more than that, it changed my daughter's life. She's now studying finance at Columbia, and she says she wants to be just like you when she grows up. Thank you for proving that the American dream is alive and well, and that sometimes all it takes is one person willing to take a chance on someone else's potential." Sarah smiled as she read the message, understanding that this was what success really looked like. Not just personal achievement, but the creation of opportunities that would ripple through generations. She had not just built a successful career, she had helped build a more inclusive economy. The woman who had been told that women can't handle finance had become the person who was teaching the world that finance works best when it serves everyone. And that lesson would continue long after her own career had ended, carried forward by the thousands of people whose lives had been changed by her willingness to prove that a different kind of success was possible. The ultimate vindication wasn't just that Sarah Mitchell had succeeded, it was that her success had made it possible for countless others to succeed as well. She had not just broken barriers, she had rebuilt the entire structure to make sure those barriers could never be erected again. In the end, the best revenge wasn't just proving Marcus Hartwell wrong, it was proving that his entire worldview had been wrong, and then helping him discover a better way to think about success, leadership, and the true purpose of finance. The boss who had said women can't handle finance had learned to work for someone who had redefined what handling finance actually meant. And that transformation, personal, professional, and institutional, was the most powerful vindication of all. Looking for more? We've got 2 amazing stories ready for you right on screen. If this one touched you, these are absolutely worth your time. Click to watch them now. And hey, subscribe and hit that bell to never miss our latest uploads.